Good morning. It has just gone 8 a.m. across the Emirates, just past midnight in Washington, meaning President Trump's tariffs are set to take effect in just seconds from now. In other words, the world as we know it is about to change. And reminder, these are the reciprocal tariffs that the Trump administration announced last week. They are the higher tariff rates that are going to be applied on 60 specific trading partners, the ones that President Trump has dubbed the worst offenders. China will be the biggest casualty, set to see tariff rates go up to as high as 104%. The original rate was supposed to be 50%, but then, of course, earlier this week, they increased that rate to 104%. Other blocs, European Union set to see tariff rates of 20%, Vietnam 46%, India 27%, Japan 24%. These are the tariff rates that are going to be implemented in just moments from now. We had thought earlier in the week that maybe we were due for a reprieve or some form of a postponement, a delay. That did not happen. And as of now, the headline has just crossed. Trump's sweeping tariffs have taken effect, including that 104% levy on Chinese goods. So that has gone into effect. It has formally gone into effect now. As you can see, this is the reaction on markets. Huge day for markets here. Asia Pacific, broadly speaking, the index is down almost 2% in trading. Take a look at S&P futures. Once again, looking to open up in the red, down 1.8%. The USD taking a bit of a dip as well, down 0.3%. And this is the board as a whole. European markets looking to open deeply in the red today, down 3.7%. Again, as the world awaits to see how the European Union will retaliate, if at all, or try to negotiate with the Trump administration on lowering down that levy. So far, we have not heard a lot from them, in contrast to China, that have decided to confront the U.S. with their own version of reciprocal tariffs and other export restrictions as well. So it is a sea of red out there. But let me just point out to you the price action that we're witnessing specifically in U.S. Treasuries. Take a look at the price action this morning in fixed income, U.S. yields. This is not what you would expect to happen on a day where there is so much red and the handover from Asia has been so risk-off. 10-year yields in the U.S., 4.5%. We have moved 20 basis points in the last hour. We've moved 20 basis points higher. That sets the move for the week up at 50 basis points. The U.S. Treasury curve has been steepening. And what does this tell you? Well, capitulation of sorts, and the fact that there is a serious amount of liquidation going on in that space. And typically, as I said, you would expect a risk-off move to see money going into safe havens. U.S. Treasuries typically perceived to be a safe haven. That is not happening today. So a worrying development there. USD dipping somewhat, down 0.3%. So again, a continuation of that theme of moving away from U.S. exceptionalism trades, U.S. dollar coming under pressure this morning as well. And then Brent, keep a close eye on what's been happening with the energy complex. We are testing $60, down another 4%. And again, as we've been talking about, we've seen a move down of north of 15% over the last 3 trading sessions. As Morgan Stanley highlighted, this has only ever happened 24 times in history, 22 of which were accompanied by a recession. So keep a close eye on the energy complex. And then gold, perhaps the only safe haven really that's out there, is sitting at $3,000, marginally positive today, up 0.6%. But this market speaks of fear, and this is what we're getting. This is the reaction on the news that those reciprocal tariffs have now officially gone into effect. One other part of the market that we're watching very closely, and anyone who's been looking at fixed income has also been pointing this out, swap spreads. So this is the difference between where cash bonds are trading and interest rate derivatives are trading. As you can see, there's been a sharp tightening in the last couple of days, i.e., as investors shed their cash bond holdings, the yield on that is moving a lot higher than the yield of the equivalent interest rate swap. Again, that tells us that a lot of liquidation in cash space has been going on, and potentially on back of concerns about the fiscal outlook in the U.S. too, and what that could mean for the U.S. Treasury curve. So really big developments going on in fixed income and globally in financial assets. All right, for more on this top story, let's get out to Min Min Lo, who joins us from Hong Kong, our China correspondent.